Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. For the record, I thought I'd just try and give an analysis of where I see Tesla as a company to invest in today, and my thoughts with that. I'm obviously a bull, perhaps a super bull even, but I reached this level in a pragmatic approach through thorough analysis. Now, there are people more bullish than me that can arrive at that confidence without having to do such in-depth analysis. Some people just believe in Elon so much. They have blind faith into whatever he does and will just invest in Elon either way. And they'll be quick to advise you as to never bet against Elon. And these bulls might have got their conviction just because they saw a SpaceX rocket land and figured if Elon can make that happen, then he can probably run a car company all right too. And to be honest, I can only imagine how astonishing it must be to watch a SpaceX rocket land. If any of you have seen, then please let me know in the comments, or even if you know someone who saw. Anyway, I just thought I'd explore the angles I see Tesla and why I also deem it potentially as valuable as some of these hyperbulls do. I just had to arrive there in my own way. And yes, I have faith in Elon and believe he'll run Tesla well, but I also like seeing the progress too. And generally, as Tesla investors, the progress is somewhat delayed, which can make it a bit harder to wait, especially when said progress is exciting enough to perhaps double or triple your net worth. Yup, patience is certainly required as a Tesla investor. Luckily, in the meantime, you can listen to the Tesla Economist to maintain your enthusiasm through the journey. Now, I see Tesla as the future, but it's not binary, as in either Tesla is the future or they go under. There's a lot of in-between potential, and in a lot of industries too. Oh, and these industries are some of the biggest in the world. For my valuation purposes, I mainly focus on vehicle sales. Why? Because that's what Tesla have proven themselves on so far. They've proven they can make an exceptional car that is so highly coveted that they're selling with over 30% gross margins, and that this was such a difficult process that no one else is able to make EVs at a net profit, and thus Tesla can keep their gigantic margins, likely for a very long time, and also likely even improve on them further. I know everyone likes to be clever with their definition of what Tesla is. It's an energy and car company, it's a robotics AI company, etc. For me, I keep it simple. If I see 99% of the profit come from car sales, I label it a car company, at least for now. But it's in a niche still as an EV company, until EVs are no longer the niche and are the establishment. My safe bet is Tesla is a car company, and despite that PE ratio being known as notoriously high, when you factor in Tesla selling a decent number of units, then that PE ratio also gets to normal as an actual car company, rather than valued like some tech AI company PE ratio. Yeah, once Tesla hits around 3 million units a year, then you will see real economies of scale kick in. This is a similar number of sales Mercedes and BMW manage. The thing is, Tesla is aiming to grow to 20 million units a year, so there's still so much more vehicle growth remaining. I think FSD should be allowed in a couple of years, at least in the US. I don't think this will be quite the make or break of the company people think, but I think it could add an extra 5% onto operating margin. So it will definitely help, and that's with an adoption rate of about 1 in 3. But Tesla makes so much money with their auto sales, it's hard to match that profit. If the adoption rate ends up being much higher, then it will do a lot more for the company. And perhaps it will be with the subscription model. At a rough guess, FSD Complete should boost the stock price 50% or so from the car business valuation. We're excluding robotaxi's potential here. I don't really think about the energy side of the business too much. I think Tesla's stock price would really be 3 to 5 times what it is today before this side of the business starts ramping up to anything serious. It's pointless ramping up energy until Tesla have in-house LFP cells. It's also bad business using these cells in energy if Tesla is still battery constrained with vehicles. Therefore, I think the auto business is going to take precedence over the energy side of the business and may not see anything noticeable for probably another 5 years. The numbers so far are good. I would invest in this company still, even if that's all Tesla was. It's still more than the company I did invest in initially, but then we move on to the nutty numbers. Robotaxis. There's little point including robotaxis into the other business, as these numbers get so big, the rest of the company is pale in comparison. I think of robotaxis like a lottery ticket, and quite a few of our numbers have already been called. If it happens, then add another 0 onto the stock price. Now you might think, well, that's stupid. Robotaxis aren't going to be a thing. All right, fair enough. But there were also people back 10 years ago telling other Tesla investors that electric cars won't be the future either. Some people, or investors, just seem to envision futures better than others. They're determined they are right, and it makes so much sense to them that they invest into this future coming into fruition. I'm sure there are a lot of people investing into Tesla solely because they believe robotaxis are going to be huge, just like how I invested in Tesla because I thought EVs were going to be huge. So there's your 10-bagger opportunity there, potentially. If you can see it, I could see it with Tesla and EVs, despite how few EVs Tesla actually made at the time, and the fact they were losing money for so long. Bots as well, I guess a lottery ticket with an even bigger jackpot, but fewer numbers called so far. And seriously, I don't think robotaxis or bots are at all priced into the stock. They are perhaps too hard to believe for many. But for me, it was more than just believing that EVs were the future. It was also looking at Tesla's financials. It was fairly easy to see that there was a path to profitability. Their OPEX was relatively low. Their margins were high. It didn't take a genius to work out that if Tesla can just ramp up to this many more cars, then they'll make a profit, and a good profit at that. I don't see similar numbers on the other financial statements I look at, not from any of the other BEV OEMs. This was backed by my belief that there would be enough demand for EVs, having to go against the narrative of the media with a reasonable amount of my life savings tied up. But Tesla has a demand problem was the rhetoric we would hear. It was so ingrained back then, it's often brought up again just to be mocked years later. Guys, we made it. And it turned out Tesla did have a demand problem, but it was too much demand, not too little, and now we're faced with a supply problem. Teslas are loved and coveted products by everyone. That sounds like a brilliant company to invest in then. They made outstanding products and everyone wants one. Now the next issue is to resolve the supply chain issue in order for Tesla to deliver to this demand, which is where we are today. We can do numbers at Tesla selling 3 million vehicles a year, or even 10 million, and they're all spectacular. Now we just want to know how and when Tesla can reach this next level of production. We have these new factories, yet they're constrained by battery cells. But we have a cell factory Tesla are already working on, and we've even seen working. They're now hopefully just refining it further, and may need a little bit more time. But once it's functioning, it turns Tesla into a serious powerhouse. Independent of third parties for the component with the biggest bottleneck, the batteries, Tesla are getting quite far with their second 4680 factory in Berlin too. They're not messing around, but nonetheless, this is the stage we're at with Tesla. We can talk about China and the issues that we're facing there, but it's all likely very temporary and inconsequential when you look at the larger picture. It's really just a distraction as we are waiting for Tesla to push the button to level up the company to the next stage, the button being the 4680 line. So that's my current view on Tesla. I think the company is very strong, and I can't think of anywhere else I want to be putting my money right now. I'm expecting a lot of potential turbulence and want to be ready for it. But Tesla feels very solid an investment. It's been crazy what we have seen happen to so many stocks as of lately, even elements from the almighty FANG getting hammered too, not to mention the rest of the EV stocks. Tesla has held strong relative to everything else, on top of Twitter and Shanghai fiascos. I feel like I might go from Tesla Super Bull to Plaid Bull when I see those 4680 lines in volume production, and I'll probably leverage up when I see something concrete. Anyway, I know times are difficult right now, so I just wanted to give a more overall view of where I see Tesla as a company today. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.